Hi folks, Dave Berkowitz here, and I want you to watch this quick video about today's Brexit vote, which is where Great Britain voted to leave the European Union. Markets around the world are plummeting. People on TV are scaring the heck out of us. And I got, judging from some of the texts I got today, like this one from one of my clients, should I sell everything and buy gold today? And of course my answer was no, do nothing, I told him. And of course, you would have had a trade yesterday before the event. After the event is too late. Anyway, take a look at the video. Thanks. Hi, folks. This is Dave Berkowitz from Value Line Partners. Today is UK Independence Day from the European Union. It is June 24th, 2016. Last night, the UK voted to leave the European Union in an unprecedented move. Britain's exit from the European Union shocked global stock markets and created huge uncertainty going forward. Nigel Farage, head of the Leave campaign, told supporters to, quote, let June 23 go down in history as Independence Day, unquote. The result, of course, came as a surprise to the world and to its markets. You see, markets had been up for the week as a Remain vote looked more and more likely. The pound also surged in the event that they were going to have a Remain vote. But today, the British pound plunged to its lowest level since 1985. Investors fled risky assets and turned to the dollar and to the yen. The Bank of England earmarked £250 billion for potential stability measures. Britain declared independence from a government in a foreign country that made 60% of its laws, with foreign judges deciding if those laws were legitimate, gaining economic freedom in the process, period. And regardless of the short-term impact on the stock market, this is a great day for the UK and for the United States. It's a great day for economic freedom and perhaps the worst day ever for European unaccountable socialism. Remember, this is what markets do. There's absolutely nothing abnormal what's going on this morning. See, most of us have to save somewhere, right? We have to save. So history suggests, and I've said this over and over again, that stocks are the most accessible route to get returns that we're going to need to retire someday. So stocks are the best and highest return vehicle, but what we have to do is we have to put up with some volatility. And it would take decades of systematic economic and political erosion to prove otherwise with 100 years of history. Remember, in those 100 years, we've had World War I, World War II, the Great Depression, the crash of '29, the crash of '87. We've had Vietnam, Korea. We've had an assassination of a U.S. president during that time. We've had the 60s, the 70s. We had a presidential resignation. We had 9/11. We've had two pretty big recessions after a stock market bubble and in a housing bubble. And then we had the Great Recession. We had the financial system nearly collapsed. And here we are. We're still at close to new highs in the stock market. So we would really have to unravel the system, the economic and political system would have to be sustainable. And it doesn't appear that that's going to happen here. Just to give you a reminder of where we stand, the world stock markets are currently in full panic mode as of this morning, but there are safe havens like U.S. Treasury bonds and gold. Gold is up a lot this morning. It's at a 2-year high. U.S. Treasury bonds or Treasury notes are at lows in yield, highs in highs. So as you can see here, we're only down about 3% from the high set last May in 2015. And so far, we're not even close to the lows that were set back in February. In January, it was 12% down. And then we had 12% down again in 2014 in October. We're not even close to that yet. So let's wait to see if we get that kind of correction. Let's not panic. Let's look for ways to capitalize on lower stock prices. Let's figure it out. Let's also remember that at the current yield of the S&P 500 of around 2.1%, compare that to the yield on the 10-year Treasury bond of 1.6%, that if we just move in the opposite direction that the lemmings are moving right now, in other words, they're moving to safe haven assets like the U.S. Treasury bond, the U.S. dollar, gold. If we move in the opposite direction, we can pick up over 0.5% in current income and get 10 years of earnings and dividend growth and price appreciation for absolutely no money. So we could buy the index, get 2.1% current yield, but remember, it's not fixed income. It's a rising income investment when you make an investment in stocks of great companies. So you're going to get the earnings and dividend growth and the price appreciation for free over the next 10 years. That's a bargain. Remember, this is what stock markets do. They're volatile in the short run, and the volatility is the price we must pay for the extra returns we get for investing in the great companies of America and the world. Remember, volatility is the sudden, significant price movements like we're getting this morning, down and up sometimes, people forget about the up ones, around stocks, relatively smooth upward long-term trend line as we picture it here. This is a graph of the annual closings of the S&P 500 index since 1940. The first thing we notice is the trend is irrevocably up. The red line is the average line since 1940. The green lines represent the most extreme deviations from the average on record. The simple idea in this chart is that the principal risk of stocks is the chance that you will lose money holding them have historically declined and ultimately disappeared with the passage of time. Looking back in time, we find that it is no more or less than a statement of fact. This is not something I wish for. It's not something I tell people every time we have a downturn just to fool you. It's a fact. It's the only thing we have to go on, and there's no reason to suspect that it won't continue. Now, Brexit increases uncertainty. We're going to have prolonged negotiations in Europe and a weakening of the EU, and that probably slows growth. But things will probably move slowly, and calm will come back for a while, and then we got to reassess. So what I did this morning was I took some gains in our market hedges. We have very large and fast gains like we did this morning. So I took some gains. That is, I sold my puts on the spiders, and then, I'll probably put them back on either today or on Monday to see how things shake out. We still have puts on a great deal of our stocks. We still have the floor under which we won't lose any more money. Yesterday, we sold a bunch of calls and gave ourselves about 0.5% of the portfolio in premium income, which doesn't expire until 7/15 of the 15th of next month. But what we basically picked up was, with today's falling, we basically made half of that money already, and it looks like that those options are gonna expire worthless, or get close to worthless soon, so we can cover them and then short some more. Anyway, I just wanted everybody to remind ourselves that what's happened this morning is not a big deal. It's only down 3% from the high and down about 2% from our recent high. Just in the recent past, we've had some much more serious corrections in the stock market. This is even close to a correction. We haven't even eclipsed the low that we made in the beginning of May yet. That could happen, and it probably will happen. Because we didn't break out to new highs. This is the third time we've actually tested it over the last 12 months or so. So it could very well be that we'll be in for another correction, and maybe if we're lucky, we get a bear market. So we can reassess some of our stocks and we get some really great prices with great yields. That's what I'm hoping for. So never fret. Judging by some of the emails and text I got this morning, people are watching breathless coverage of all the networks, especially the financial networks, of the UK exit. Really smart, fancy people that never saw any of this coming are now telling us that it's Armageddon. And this is, the 40th time in my career that the world is coming to an end. It never has so far, and it will not end here. In fact, look on the bright side. This is just another example of the advancement of economic freedom ever since the Tea Party took over, and it's another confirmation of the breakout to the golden age of the fifth techno-economic revolution, the digital revolution, the build-out phase, and we need to clear away all the prison guards from the past so we can have new economic policies and new institutions that will fully embrace the build out of the economic revolution. Thanks for listening. Have a good day.